Good morning and welcome to the Killik and Co market update. Finally, some good news. Yesterday was a great day for US markets. In fact, it was the best day in over 2 years, and that was all thanks to an inflation reading that came in slightly below expectations. Here's the US CPI over the last 10 years. The data point for October is at the end there in the green. That number came in at 7.7, which is still way above the target, but it's not as high as expected. And when you look at it on that chart, it does look as though inflation is following a downward trend. If inflation is falling, then interest rates shouldn't need to go up as much or as quickly. Interest rate rises have a particularly negative impact on growth stocks, and so the prospect of rates not going up as much as previously thought is particularly good news for growth stocks. Here we've got the S&P 500 index over the last year in the grey. We've separated out the growth constituents in the pink and the value constituents in the green. You can see the growth stocks have been hit the hardest over the last year, but they had the biggest rebound yesterday. Here are yesterday's numbers for some of the main indices. The S&P 500 growth up 7.49%, the Nasdaq Composite, also very tech-focused, up 7.35%, the S&P 500 Value Index, that was up 3.89%, and the Dow Jones, which is also quite value-focused, that was up 3.7%. We then saw some pretty big moves in individual stocks as well. Amazon up over 12%, Alphabet up nearly 8%, Salesforce 10%, and showing that the positivity spread outside of the US, ASML. All in all, a pretty happy day for investors. This week, the midterm elections have taken place in the US. We're still waiting on the final results, but it's worth having a look at what we do know so far. Going into the elections, it was expected that the Republican Party would do really well, and that it would emerge from the elections with control of both the House and the Senate. We're still waiting on those final results, but at the moment, it looks as though the Republicans have not done nearly as well as expected, and it's possible that the Democrats might retain control of the Senate. If this does happen, it could potentially be quite good news for markets. If one party has control of the House and another has control of the Senate, then it will be more difficult to get any major new legislation through. Markets tend to be quite nervy about change, and therefore gridlock in the US Parliament could potentially be quite good news for markets. The third quarter GDP numbers for the UK came out today, and there's been some fixation on these because of the Bank of England's recent comments about the UK potentially heading into a recession. A recession is technically defined as 2 consecutive quarters of falling output. The UK's GDP in the second quarter actually grew by 0.2%. In the third quarter, according to the data published today, the economy shrank by 0.2%. If we do have another negative quarter in the final quarter of this year, that will mean that the UK economy will technically be in a recession. A couple of things to bear in mind though. Minus 0.2% is a very, very minimal rate of negative growth, but also it's important to bear in mind that the market tends to be forward-looking. It's likely that the market has already priced in a recession, and when we actually get there, the market will then be looking ahead to the next thing. Moving on to have a look at next week, we're coming to the end of corporate reporting season now, but we have got results out from SSE, Nvidia and TJX. That's it from us. Enjoy the weekend, and we'll see you next Friday.